traders, welcome to the TMT stock market strategy video for Thursday, September 22nd. All right, so we got the Bank of Japan out of the way, we got the Fed out of the way. Janet Yellen did not cut rates as expected. I don't think she's ever going to cut rates, to be quite honest with you. Total shenanigans at the Fed. I mean, I tell you, they should just wipe out that whole extension arm of the government. It's just a total waste and useless time to have someone like that in office, and the whole Federal Reserve governors, the Fed governors, just a bunch of crap. I'll be honest with you. Nonetheless, the markets rally because the free money continues. So this is what's been going on since 2009, and they're going to keep buying the market up until it stops. And when it ends miserably. So just keep that in mind. Now there is a 60% rate hike chance in December. Fed Fund futures are showing a 61% that she's going to go on in December after, of course, the election is over. So it's a bunch of shenanigans. It's heavily manipulated by the government, but that's not what we do. We trade what the markets give us. So I have a good scenario to play out in the next several days, and I want to get right to it. Right now we got the UUP, the dollar ETF. Yep, sold off on a no rate hike decision. That's to be expected. I don't think that's going to be anything crazy. I do think that that the dollar may go down to the bottom of the trend line, but I do think it holds within this trend line and gets tighter and tighter into the apex, and then starts to expand one way or the other. I do think that the dollar will probably rally instead of actually sell off, but it might take a couple, 2 or 3 down days just to kind of digest the move here. Okay. Next is going to be rates. As you can see, we popped up a little bit. Here's where I like to see. I think regardless of what Janet Yellen says, she's going to be raising at one point in time, whether it be her or another Fed governor. I think right up in here, you feel that whole gap area, and you look TLT to look to go down, look to short lower. And that's what I'm looking for in the TLT. And again, this is just a sample of our Pro Trader Premier video. This is just a daily chart. What we provide is patterns and areas of support resistance where you can trade off of on a lower term time frame. So check us out, guys. You're going to really love the charts. They really do quite well of late. Next is going to be the GLD, which is the gold ETF. Of course, it had a good, decent day, but we're still within this descending triangle. This double top measured down to 2050, still good. And as you can see here, we're still making lower lows and lower highs. So really, one day does not make a trend. I'm going to need a couple more days, and I really would like to see we take out this pivotal high here at 129.25. Okay, we could take this area out, then maybe we can challenge the highs up in here. But as of right now, we got a gap up. I think we get maybe another follow-through day right to the trend line here of 128.20. Next is the GDX. See the GDX here. Nice big pop yesterday. And again, we have resistance at 28.52, and then up again above this upper trend line area, which would probably take us right about to $30.30, which that's what I was looking for before this move went lower, is to fill that gap area here, if it were even to get up to that area. All right, now let's go into the indexes, which is quite interesting. So we had almost 3 months of just literally doing nothing but going sideways, as you can see here. So the whole summer and into September, we did nothing until we had that one move lower. Then we had the one move up, lower, up, which was all gaps, by the way. And then we formed this pennant. Now we're out of the pennant, but we're sitting on the 21 SMA on a daily chart. And I want to show you a 60-minute chart where I'm thinking sentiment is extremely high to the upside, by the way. So we have extreme bullish sentiment. So this is what I'm looking for, and what I'm looking to play, of course, only if it triggers. I'm looking for an additional gap up that takes out this zone here, and then we get up into the 218 area, which would fill this gap here. And once we fill this gap, right, and we start to roll back over again, this is where the big short comes into play. I think the markets are going to get everybody long, looking to challenge the highs and make new highs, but it's going to fail. And I do believe coming into October, we're going to get that push lower and get a real nasty little sell-off. And I think we take out the 212 and we get ultimately down to the 210 from the 218 high, and we get down there rather quickly. And then we would reevaluate and see if we really have a sell-off, a correction, or it's just a crazy pullback. But that's my plan, guys. This is what I'm thinking here, is that we get everybody Everybody was impatient. All the shorts trying to short down here, all the longs trying to buy up here. So what we did was all we did was consolidate for 2.5 months. We went down that one Friday 3 weeks ago. Going to be 3 weeks ago. Consolidate for another two weeks just to break back up again and to fail. And once that fails, I think we take out all of these zone areas here and get back down to the 210, 209 area. That's going to be my plan. And again, only if we get a sell trigger based on your trading plan. Okay, that's the important. You don't short because price is just up here. Next is the transports. Again, had a decent day yesterday, but nothing to write home about with the transports. Russell did well. Russell is into seasonal strength, so you can see we had this bear flag here, and now we just popping out of that bear flag, negating the flag pattern, and testing the upper end of the trend line here. So we're back out of our proprietary trading rate, our trading average, and by the way, speaking of that, we TMT is still on a sell signal. Remember, one day does not make a trend change. We need 2 full days and then a third day to take out the high. Okay, and then lastly is the Qs here, which made new all-time highs yet again. So crazy stuff that we have here, and it's all Fed-induced, guys. It's all Fed-induced. Markets are prematurely up at these levels. Everybody knows it, and it's just a matter of time before something really drastically happens. And that's where you, as traders, investors, need to be prepared. Now, intraday trading, you can trade as you wish, obviously. Me personally, I'm not a Fed day trader. I don't trade Fed days because it's just too price movement is just erratic. It's all over the place because that what the algos look for the stops, the buy stops, the sell stops to get everybody out, and then at the end of the day, they just want them up into the close. So we'll see what happens today, tomorrow, and going into next week's gonna be very interesting to say the least. Have a great day. We'll see you tomorrow.